Hey, what's up, everybody? It's Wednesday, February 2nd. Right, I got that. All right. Another day up in the market averages. I think that was like the fourth day up. We had about a 1% gain in the S&P, about a 0.6% gain in the Dow, and a 0.5% gain in the NASDAQ. So this is a continuation of this bounce from very oversold conditions. Conditions that had very high levels of bearish sentiment. It's basically what I've been talking about now. And it's totally understandable. I mean, we got very, very negative on the market psychology, and, you can expect to see a bounce. We also had some moderation in the tone of some Fed members, and that kind of maybe soothed some worries about rate hikes. But the Fed will go ahead and hike rates. The market is currently pricing in 5 rate hikes this year, and I've heard as many as 7, but from what I can see in Fed Fund futures, right now 5 rate hikes. So today we had the ADP payroll. Friday, remember, the government's jobs report is going to come out. But today we had the ADP payroll report, and that was expected to be up 250,000 for January, but it was negative 300,000. So a net loss of 300,000 jobs in January. And the headlines were, oh, we had a surprise loss in jobs. But actually, if you are following what is going on with the fiscal situation and how that is impacting the economy, which is, what I've been following and what I've been telling you about, it was not surprising to me. And it kind of sets up what I think could be a weak number on Friday. I don't think it's going to hit its target. I think the forecast is like 225,000. I think we'll come in lower than that. We might even see a negative like the ADP forecast. But here's the thing, folks. I think a lot of people get married to price movements. They look at the market strictly in terms of price, where are the market averages, and they try to extract from that, deep meaning. And that is just a bad way to go about it. I mean, it's kind of like if you're a pilot and you're flying and you just kind of rely on your gut instincts as opposed to looking at your instruments. Any seasoned pilot will tell you you must pay attention to your instruments. You must trust your instruments at all times. My instruments, or the instruments that you should have, that's the economic data. I will tell you this right now, that the stock, I'll make this an unequivocal statement, okay? The stock market will follow basic conditions in the economy. The trend of economic activity. It will. Now, having said that, it may not follow it on an instant. It may not follow it in over a period of a couple of days, 3-4 days, maybe sometimes even a couple of weeks. But it will follow conditions in the economy. If the economy is expanding, like we saw through much of last year, and certainly in the fourth quarter, the stock market's going to go up. If the economy is slowing down, and if it goes into a contraction, the stock market is going to go down, or at best, it's just going to be stagnant. Okay? Now, we lost 300,000 jobs in January, at least according to ADP. The federal government is basically running a balanced budget right now. I went all through that yesterday. All right, we have like 446 billion in monthly flows, but we have 466 billion in taxes. So it's extracting, it's taking away that income and savings, which it first pumps in and then it takes it right back out, and then some. All right, that is not a situation that is conducive, at least for me, to an economic expansion. So to me, I have not changed my outlook on the stock market whatsoever. I think you should be raising cash into this bounce. This is a bounce off an oversold condition. It is a bounce. It is a short covering rally. And I think we are going to see lower levels, at which case you have a better entry point to get into the market. And I think these lower levels, once the stock market really starts to head lower based on the slowdown in the economy, we could see lower levels that will hang around for quite a bit of time, because I don't see the scope for any additional fiscal stimulus. And it would be fine if, the government were running a deficit. But I mean, basically, as I went over the numbers yesterday, we're going to end this fiscal year, if we're lucky, with a deficit about 1% of GDP. And I just don't see that as sufficient to sustain the market where it is and to keep economic growth in an expansion. Not even at very low growth rates. I think it's flat. It could even be negative. And the fact that we saw a job loss, I mean, that's already an indication that may be happening, that the economy is in some kind of a contraction. We're going to see the numbers on Friday, and we'll get another picture of it. But right now, that ADP payroll report, to me, it wasn't that surprising. I mean, when you have this very significant slowdown, not even a slowdown in the fiscal, but the flip from deficit to surplus, I mean, to me, that is a pretty important development. I mean, I mentioned that we haven't seen a surplus in this country, the federal government surplus, since like the year 2000, 2001. And that, that preceded a big recession, or that was the factor that caused a deep recession in 2000, 2001. So that's where I think we stand. I'm selling into this rally. I'm raising cash. For me, the instruments, that is the economic data, and more importantly, the instruments, if I'm going to use that pilot's analogy, my instruments are the fiscal flows. And, my instruments are telling me that, we got problems. We got problems with the engine here. And that means the plane's going down. That's about the best way I can put it right now. It doesn't look like that if you look solely at price, which a lot of people do. I understand that. That's like a crutch. It's like, listen, how do I make this game easy? I'm just going to look at the price. If the price goes up, I want to buy it. If the price goes down, I want to sell it. I mean, that is a loser's game. You're not going to make money that way. You might get lucky once in a while. But I mean, if you want to go about this in, an educated, informed way, a sophisticated way, you got to look at what is happening to the economy. You have to be able to forecast that. The best way to forecast that is to look at these gigantic flows that come out of the government, or less than gigantic in this case because they're being subtracted out. And that will give you a pretty reliable picture of the landscape, of the economic landscape as we look out. I've never been one to say, hey, let's look at the government economic numbers and let's extrapolate from that, because those are numbers in the past. But when you look at these flows, as I've said so many times, they drive everything. So that's where we are right now. We're getting a bounce off of oversold conditions. It's a short covering rally. And it's not surprising to me how much it has bounced, because it was really, really negative. Remember, I said yesterday that the AAII survey, the level of bearish sentiment was the highest in 9 years. So yeah, you could get a nice bounce off of that, but the next leg down is almost certain to come. Anyway, that's it for now. Anyone who's interested in an individual subscription to MMT Trader, please send me an email at mnorman@pitbulleconomics.com, and I'll see if we can work something out. All right, everybody. See you tomorrow. Bye.